For those watching on YouTube, after this thing the guide to monthly charts video goes more into depth on some of the charts that I will fly through pretty quickly. So if you want a little more depth of what I'm looking at, if it doesn't make sense, go check those slides out. So could this fall be positive? Seasonally, it's very likely, even though news is bad, things are ugly out there for sure. Certainly, I'm hearing clients saying, it's a tough time to be invested, or should we look at being more safe? And I think that's usually the opposite of what you want to be doing. If that's the vibe you're hearing out there, it's usually the correct thing is to do the opposite. And I'm always very contrarian about that. You can ask Laura or anybody on our team. So market can go up on bad news, so never forget that. So things could seem terrible, but that doesn't mean things are bad. The American Horror Story interest rates, I just thought that was really funny. Everything could be a horror story about our economics or war or all sorts of things that are going on in the world. But there are some things looking up that I think if you ignore them, you'll miss them. And there's some good opportunity I don't want to skip over. So onto our long-term, let me get my laser pointer. There we go. Long-term cycle is pointing down again. But as far as long-term, I don't know how long it's really saying. What I'm looking for is how far does it get stretched on either end before it reverts to the mean back to this line in the middle, right? So the market can get stretched out, and this is really more about advanced decline, like how many stocks are going up versus how many are going down. And when it gets stretched one way, it tends to come back, right? And this is where the July, August, September thing happened and continued on to there. This wasn't too bad, and then this clearly was the time to be out. But now we're getting a mean reversion. I'm seeing things turn around, and I'll show you those in a minute. But still the slope of this is down. So I don't know. We could have a good month, and then we're just all out in a different environment going forward. So we will be on the lookout for that. Midterm indicator. This is one that we actually use to put money in and out of the market. Did go positive and strongly positive a couple weeks ago. Last week sometime. There was a little bit of fake out mid September. We did ignore it. There were other factors that said, no, it's not the time. But this one was like, yeah, let's take a shot at some stuff. Start putting money to work and see where that goes. But this is a pretty good indicator of money coming into the market and coming out of the market. When money's coming in, you want to ride that wave. You don't want to say, oh no, things are bad. Money drives the market in both directions, so you can't ignore that as a factor. So I try not to. And the next little segment of our dashboard I don't normally show is the relative strength of pairs of the market. So the NASDAQ versus S&P, the NASDAQ is stronger, the large cap versus small, large cap is stronger. And then again, NASDAQ versus small, NASDAQ is the stronger one. So that's definitely large cap. And then the NASDAQ, which is really more the large cap growth side versus the value side, which is interesting. I really thought the value was going to jump first. And there's some seasonality reasons that should have happened, but it really has just been broad. I'm not complaining. I mean, we've been on it since that has started. So I'm not super unhappy about that. But yeah, and also secondary, when growth is outperforming value, that's typically a positive market. Rob Hanna does some great research on this that's worth checking out too if you want to go down that rabbit hole. But if I'm seeing growth here, then I know the market's probably not in a terrible place. All of last year when the market was falling apart, value was the leader. And that should make sense, right? When the market's growing, growth should be a strong place to be. And when it's not, the value, the safe stuff should hold up better. And then finally, I've got leverage versus non-leveraged. And what this is a metric of a leveraged fund versus a non-leveraged fund of these indexes. So if the leveraged fund is outperforming the non-leveraged fund, that means there's probably a really strong trend occurring. Right now, we don't have that in the S&P, but we do in the NASDAQ. Again, that backs up the growth really over value or over the broad mix right now. So we're still not there yet, but we have been dipping in on the growth side on the NASDAQ on things like that. Definitely worth noting. On our sector list, no surprise, technology and communications. And communications is typically the Facebooks and the Googles and it's big tech. I don't know why it's broken out into two things, but really it's tech and tech. That's what's leading the market right now. But look, we've got all these turning positive that have turned positive in the past 1, 2, 3 days. These turn green for me when it's been 1 or 2 or 3 days positive. So we've got basic materials going positive. We've got financials going positive. There's something really interesting about that I'm going to cover later. Industrials are positive. Another interesting one, real estate. It's about time, although I just think that there's a bigger cycle problem going on there, but we'll see. Healthcare positive and consumer discretionary. And that makes sense coming into the fall season. Things like Amazon, what was it, Bath and Body Works is another one we were looking at that just tend to be really strong in this period. It's still things that people buy going into the holidays. Right. So that's going to make sense why consumer discretionary is doing well. Now, oddly, consumer staples, the stuff that should be safe, is just having a terrible, terrible time. I think it's even close to being down negative year to date. And last I saw, utilities are down a lot year to date. So we don't have a broad market going up. And this is a lot like 2021, where we had a handful of stocks. It was the Tesla, Microsoft, Google, Apple. Those were going up, while most of the market was just kind of stagnant and going flat, and a good part was going down. So you have to kind of say, okay, what's happening there? We don't have broad participation this year in its entirety. So I do wonder if we're setting up for, again, like we're having a next year, which is going to start off like 2022, where it's just like straight down and then we chop down for a while. There are reasons why that could happen, but I think that's still down the road. I think we've got, in the short term, looking at 1 to 2 months, probably pretty positive. So there's the sector looking. Rotation, I love rotation. It's like watching the ducks go around the pond. We've got, again, XLC, XLK. It's basically technology pushing up and to the right. That means they're improving and pushing into leading. Once these all are really making that same direction, then you see there's a broad push, at least for the moment, into the market. So it's something that I'm watching for. And I think the setup is there, and we are starting to buy in different categories, again, like the growth side, like those things that are participating. I still want to see utilities pick up and energy. I don't know what energy is doing. It just can't figure itself out. It's just going, can't figure it out. But I think if that jumps into, we're going to have a good push for the next, say, 30, 45 days. And then finally, seasonality. We've been looking at this a lot lately. And actually, Will and I have been kind of debating this. And typically, prior to 2008, bottoms in the market tended to happen around here, around the second half of October, right? The 87 crash. A lot of things prior to 2008, the big ugly times, happened in that second half. And you could typically use a MACD to turn positive around that time. But since 2008, that has shifted forward, and it can be as early as the 1st of October or right here around the 14th, 15th of October. So looking at really Friday or Monday next week could potentially be a bottom before. What happens? The market tends to go up a very high probability percent of the time. I think in the past 10 years, 100% of the time from October 15th through December 1st, the S&P was positive. Even in 2018, when the market had a big sell-off in the end of the year, what's interesting is there was a jump up right until December 1st, and then it continued down into Christmas. So that it's an interesting, there's a lot of different paths that we could take to get to that point. But, the probabilities say that these next few, again, 30, 45 days are looking very positive. And we could see another couple of days of choppiness. Maybe we have a really bad Friday and Monday, and then that would be a fantastic entry to get very aggressive going into first weeks of December, and then kind of see where things play out from there. Is the rotation weak? What sectors are falling out of favor, and taking those kind of things into consideration.